Despite some mildly disappointing economic reports, the U.S. markets actually closed higher across the board here today. The Dow and the Nasdaq and the S&P 500 were up just slightly, some of that as a result of some positive earnings reports from companies like Honeywell and Netflix. However, the star of the day was actually the Russell 2000. The small cap index was up over 1%. So as it stands right now, we continue to have bullish postures across the board. In tonight's trade application, I wanted to take a look at a consistent dividend raising company that might be priced at an attractive level and possibly sell a put against that. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 17th, 2019. First of all, if you're new, welcome aboard. Remember to go to YouTube, click subscribe. While you're over there, check out our description area. Be sure to sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZee. Feel free to follow me, and I also would encourage you to click like and retweet anytime you see David and I posting these Market Outlook related posts. Lastly, we do have a presence on Facebook as well. Feel free to join our group at the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. This will give us a good sense of what's happening to the major U.S. equity indices side by side by side by side. And as I mentioned in the intro, the star here today was actually the Russell 2000. Now, we actually had a question about this in my question and answer session earlier here today. So for those of you that are premium members of Market Scholars, feel free to go back and watch that. Recording is posted. But we kind of discussed the Russell 2000 and how it's been languishing here for several months, if not years, compared to some of the large cap indices and what some of our expectations might be going forward for the next 5 years. But as it stands right now, this was a very constructive price action that took place. As you can see, not only do we continue to have a weekly bullish posture, that's what that light green color on the background is telling us, but now after today we can also claim that we also have a price above a rising moving average. Notice how that moving average color, the tip of it, is now green as opposed to yellow the way it was here in previous sessions. So that's a positive sign. As you can see with these other charts, we got a green moving average right here on the 11th for the Dow. We got a green moving average right here on the 11th for the S&P 500. And it was the same day there for the NASDAQ composite. So in other words, had you been buying on those days, you would have had further upside action. It's usually a bullish sign when we see that moving average tilt towards green once again. It's telling us that the averages are supporting that the path of least resistance is to the upside. Now, as we look at some of these other charts, it's worth noting that the green lines, or the intermediate lines on the market forecast on the other three charts, are all at very elevated levels. In fact, all three of them are within a day or two of entering the upper reversal zone. So that's why you're seeing the background color on the rest of these charts dark green. It's telling us that we have a strongly bullish posture there, where the reading of the intermediate line on the market forecast technical indicator is above 50. And so things are going swimmingly. You know, as you can see here, we're very close to all-time highs on the S&P 500. We closed very close to 3,000 here today. I'll be curious to see if they try to pin that number tomorrow, with it being options expiration day. But anyway, that means we're only about 30 points away as it stands right now from an all-time high. In other words, 1%. That's all we need before we break out the party hats again. So things have been going fairly smoothly for those of you that are willing to be bullish in this market environment. As you can see here with the Dow Jones, we're also very close to all-time highs, and we're also very close to having that green line in the upper reversal zone. Interestingly enough, the Dow Jones almost gave us a bullish intermediate confirmation signal today. Note that the momentum line is at 22 right now. Remember, that would have to be at 20 or less in order to get that signal, but we were very, very close to that. So perhaps an opportunity for those waiting to buy on the dip there a little bit, as we sold off a little bit from the highs here earlier in the session. Let's go ahead and take a look at our next chart setup. In this case, let's take a look at the 3 green arrows chart setup. This is chart 4D on our newest charting package for those of you that are premium market scholars. Now, as a reminder, when we look at the background colors of these charts here, that green signifies 3 green arrows in this case, not bullish posture like it was on our last chart that we looked at. The 3 green arrows that we're referencing here are basically the 30-day moving average, the MACD histogram, and the stochastics. And when all of those most recent signals are green arrows, then basically it plots this lighter green background color that you see on the charts. Now, prior to today, we had already received 3 green arrows on 3 out of the 4 charts. The laggard was the Russell 2000, but after today's big boost to the upside of over 1%, the Russell 2000 now has 3 green arrows as well. That's why you see that slight sliver of light green on the background there. And the reason behind that is we did get a green arrow there on the moving average as we closed above that moving average for the first time in quite some time. We'd have to go all the way back here to the end of September since the last time we crossed above that moving average. So we'll see if this one will hold a little bit better, but certainly a positive sign that that momentum is kicking into high gear and also getting some support through the form of the stochastics down below. So, strongly bullish market as it stands right now for trend trading purposes. Remember, I do teach a class on Mondays called Top-Down Trend Trading, where we look not only for stocks that have higher highs and higher lows, but look for them within outperforming sectors and industries as well. And so we do use the 3 green arrow philosophy in that particular class, and we've been doing reasonably well. In fact, we're very close to all-time highs in that particular account as I looked at it here earlier today. So we'll see if that can hold throughout the rest of this year. Normally, we do find that seasonal trends are bullish near the end of the year. And so I think right now there's a good shot that we'll be looking at higher prices come the holiday season. Obviously, it's not going to be a straight line. There's always going to be fits and starts along the way. But we're holding up very well in what is normally a fairly choppy month of October, and therefore I think the longer we can hold up near all-time highs, the greater the chance is once we slash through all-time highs, we will be able to kind of establish a new range of trading to the upside higher than investors have ever seen in the past, all-time highs. Let's go ahead and see what we've got coming in here from a longer-term chart. Now, this is chart 4C. This is our 1040 crossover method. And the thing we've been waiting for a while is the Russell 2000 to give us a bullish crossover from this longer term perspective. Remember, these charts are 3 years in length. Each one of the candles is 1 week in length. And the way that you are kind of reading the background color of the chart in this case is if you have a pink background like we do here currently with the Russell 2000, it means that the 10-week moving average is still below the 40-week moving average. So 10 period is in orange, 40 period is in blue right there. So as it stands right now, despite today's big move out of the Russell 2000, it wasn't quite enough to move that longer term view of the markets through the moving averages themselves. And in all likelihood, it's probably not going to happen tomorrow either. Remember, with these being weekly candles, Friday's close is the most important one, but we still have a little bit of separation down below here. And so I would imagine that it probably is not going to happen tomorrow. It could happen as soon as next week if the Russell continues to rally, but we've said that before, and it just kind of has failed on us. As you can see, we've kind of flip-flopped and flip-flopped back and forth here for much of 2019 on the small caps, whereas this approach, the 1040 crossover method, has been much more consistent on the large cap indices, where we've really had the positive crossover occurring in late February and has held that entire way through. All right, let's go ahead and now take a look at some 12 grid analysis. Let's start with chart 5A, the asset class 12 grid. Some reminder, the background colors of these charts will tell you whether we currently have either a bullish intermediate posture or a bearish intermediate posture. The darker colors are going to signify strongly bullish or bearish, and the lighter colors will be weakly bullish or bearish. So as it stands right now, we do have 3 deep shades of pink on the chart here, and that's TLT, foreign bonds, and US dollar. All of those have a strongly bearish posture right now, and that was the case on Tuesday when I did this video as well. In fact, you can see the dollar has not helped its cause since I did that video, because it's fallen for the last 2 days, and that's a pretty aggressive move for a currency that we see right there. It's really falling out of bed. Note how consistent this was up until the last couple of weeks. We had a really strong series of higher highs and higher lows. Now all of a sudden the dollar's getting weak. And so perhaps this is a time where money is going to start transitioning over to perhaps some foreign stocks, maybe other things like commodities. You can see that oil was up nicely here today. Now we're still below a falling moving average there, but that's a nice looking candle, and we got to start somewhere as far as carving out a support level. You can also see that gold was up slightly today, although gold has kind of been struggling more recently as well. So we'll have to keep our eye on that, but just plant that seed. If the dollar continues to stay weak, it's possible that large multinationals in the United States would outperform. It's possible that foreign companies, generally speaking, will outperform, and it's possible that commodities might outperform. As we start looking at some of these other charts here, I'll point out once again that I've been impressed here recently by EFA. This is your foreign stocks developed. So think about continental Europe, think about Japan, Australia, etc. Those are areas that have been kind of perking up a little bit more here recently. I know we've talked about Japan and Germany here recently, and we'll probably look at that here shortly again. But those are the kind of areas that are providing a little bit of stability there to EFA, and it is hitting yet another 3-month high as of today, so a good sign there. We also see that preferred stocks hit a new 3-month high here. Now, not a lot of people talk about preferred stocks. They aren't the most liquid asset class on the planet, but of course, if you wanted to just have some exposure to that area, PFF is a good ticker symbol that can get that done for you. You're also seeing that real estate had a nice bounce here today through the lens of VNQ in this particular case, but this has been one of the strongest areas of the market in 2019, and even when it pulls back, it usually pulls back to an area of support, catches some bounce from there, and launches back to new highs. And that's kind of where we stand right now with real estate, still above that rising moving average and within a stone's throw of hitting new highs yet again. Let's go ahead and take a look at our next chart setup. In this particular case, we're going to go ahead and take a look at the U.S. sectors. This is chart 5C. And as it stands right now, we have the staples and the utilities in pink down here. Otherwise, it's kind of a clean sweep there across the board for bullishness. Energy is a little bit different than the rest of the charts. The background color there is that light green color, so we have a weakly bullish posture on energy. All the other charts are strongly bullish. Some of them, of course, look healthier than others, as is always the case. But for the most part, we've seen kind of a little bit of a mini transition here in the last week or two, where money from the defensive areas has found its way back into the more cyclical areas. You can see communications, as an example, having a nice run in the last week or so. Discretionary, we talked about booking holdings on Tuesday when I did the video. That continues to attract some capital. Even the industrials there, I mentioned Honeywell earlier. They had a nice earnings report. And there's some other charts out there like John Deere that look pretty good. Fastenal broke out here a couple of weeks ago. So there's a couple of charts there of stability as well. But in general, it's a healthier sign when we start seeing money rotating into those more cyclical areas. I'd also want to point out that healthcare has had quite a rally here recently. Healthcare has been supported this week by Johnson & Johnson. Johnson & Johnson for the last 3 days has had a really nice rally. And remember, J&J is the biggest component of XLV. In other words, it's the most important driver of price action of XLV on an individual component basis. And so when Johnson & Johnson's doing well, it leads to a better chance that healthcare is going to start stabilizing as well. And healthcare needed it. It was really kind of falling out of bed there going into the beginning of October. So this is a nice rally, kind of almost looks like a big V-shaped rally that we've had right there, where you've rallied just as strongly on the right-hand side of the V as you fell on the left-hand side of the V. So I would anticipate that healthcare will perk up when I do my sector selector rankings tomorrow night. So stay tuned to that. Of course, I always post the sector selector to Twitter for those of you that follow me there, and also on our website at marketscholars.com. Let's take a look at another 12 grid. In this case, let's go ahead and review the primary global stocks 12 grid. This is chart 5E. And here we got a clean sweep for the bulls. And so, as I mentioned before, with the US dollar falling out of favor here in the last week or two, that is giving rise to a lot of these foreign-based securities. We have a lot of bullishness here. And as I mentioned on Tuesday, Japan is one of those leading areas. Now, it has pulled back the last couple of days, but not dramatically so. Really just giving back part of the gains that it had from that day here on Tuesday, but obviously remains in a very strong uptrend right there. I would also say that France looks fairly promising. It hit a new 3-month high here today. We also had Germany hitting a new 3-month high here today. And Italy was very, very close. It was right up there with where it was trading back on July 18th. So, a lot of those areas in continental Europe starting to perk up all of a sudden, and that is what is helping support EFA, as I mentioned before. As we look at our next set, this will be our secondary 12 grid, so global stocks yet again, but some of the less important economies out there from an economic perspective. You can see that here's a little bit of a different story. Now, one thing that really stands out to me as I look at this, boy, Turkey had a day, didn't it? 3.6% to the upside. That would be, we would be popping the champagne if that would happen to the S&P 500. That's an aggressive move, 3.6%. So the whole country of Turkey in celebratory moved here, but obviously they got a long ways to go. This had been one of the worst performing countries out there. So despite the massive kind of rally that we have here, it's possible that's a dead cat bounce. Right, we talked about that on Tuesday as well with the idea that, hey, we got this oversold cluster signal. We might have gone down too far too fast. It's time for a little bit of a spring back. But even if it does spring back, remember that the expectation would not necessarily be that this is going to all of a sudden go into an uptrend, right? This is just a slight bounce within a continued downtrend at this point, or at least that's the way that I see it. Same thing can be said for Saudi Arabia. Nice bounce the last couple of days, but clearly still in a downtrend. And so until we start breaking above that moving average and staying above there, I'm going to assume that that is going to be a failed bounce. However, Saudi Arabia is probably going to be very hooked to the price of oil. I mentioned before, if the US dollar is falling, sometimes that helps support commodity prices like oil prices, and it also helps support foreign stocks and securities in general. So, it kind of really benefits a country like Saudi Arabia if the US dollar can fall. And so if that does continue to happen, maybe there's a little bit of hope there after all. But for the time being, if you're looking for more kind of embedded trends, then Taiwan, which is a country I mentioned on Tuesday as well, looks really good from this perspective. You're also finding that Mexico hit a new 3-month high here today, although it did end up selling off by the end of the day. However, still a strong uptrend in play there. Netherlands look pretty strong there as well. So, I think on the whole, the temperature of the foreign markets has had a kind of a renaissance here of sorts in the last couple of weeks. And a lot of that's probably courtesy of the falling US dollar. So if you're looking for strength, remember, there can sometimes be opportunities outside of our own borders here in the United States, and maybe some of these charts will speak to you. All right, real quick over here on the internet, reminder that we are in earnings season. I mentioned in the intro that Netflix really beat here today, and their stock was up nicely. We also saw Honeywell report this morning. They were up nicely. This afternoon, we've got a handful of companies that are reporting here as well. Atlassian, one of the more popular cloud computing stocks over the summer. Intuitive Surgical, which has been one of the great growth stocks of our era. And then even E-Trade. And of course, E-Trade in the news here recently for lowering commissions here in the United States down to $0 for placing stock trades, along with a number of other brokerage companies. So maybe it'd be worthwhile just seeing how some of those companies are faring in the after hours session. Let's go ahead and start with Team. This is Atlassian. And as you can see, it's trading pretty much in line with where it ended the day. Now, this particular stock was very hot during the summer, but like a lot of the cloud computing stocks, they've really cooled off dramatically in the last month or so. And so the high on this one, the 52-week high, is $149.80. We're down to $122 right now. They reported after hours. Stock fell as low as $113, but has bounced all the way back up to $121. So not a whole lot of directional nature to this particular chart yet. Perhaps that'll be sorted out in the morning after the company does their conference call and different things like that. Let's take a look at that other one that I mentioned, which is Intuitive Surgical, ISRG is the ticker symbol there. This is a big beat, or at least that's the presumption, considering the stock price is erupting here after hours. The stock traded at the end of the normal session at $529. It's currently trading at about $550 after hours, so it's up a good $20 per share. As you can see, some positive headlines coming out here regarding their Da Vinci surgical equipment. Of course, robotic surgery sounds somewhat like science fiction, but most definitely has a place in our future in terms of healthcare. So right now, Intuitive Surgical looking very good heading into tomorrow's open. And then let's take a look at E-Trade as well, just to see how investors are treating that particular company. Looks like it's down a little bit. They closed the session at $39.04. They're currently trading at closer to $38.50, so down 50 cents or thereabouts. So will be very interesting to see how the earnings start coming in future quarters for companies like E-Trade after the market kind of comes to terms with the idea that they're not charging anything for placing trades anymore. All right, and real quick here also, while we're over on the internet, wanted to say thank you to everybody that did click like for me last time around. Over 106 of you did so, it looks like. So anytime we're over 100, I'm always very appreciative of that. Please continue to do that on a daily basis if you get value out of these videos. Now, speaking of which, next week David's family has his fall break, and so quick reminder of how we do things when one of us is out of the office. I'll be doing my normal schedule of Market Outlook videos next week on Tuesday and Thursday, but on Monday, Wednesday, and Friday, when David would have normally done his schedule, there will be no video. However, as long as I've got time in my afternoon, remember I've got my own schedule and classes to teach, but as long as I have time on those afternoons, what I'll plan to do is put together kind of the paragraph description that you see up here, kind of describing what happened during that particular trading day, and still send that out via the normal email approach, and also update our blog. So just wanted to give you guys a heads up. I know it's probably going to be hard for you to remember that through the weekend, but if you're waking up next week and wondering where's that video on Monday, that's the reason. David is out of the office there. But again, I'll be back with you on Tuesday, and as far as I know, David's going to be with you tomorrow, which is Friday. So you'll hear from him yet one more time this week. And of course, remember, tomorrow David also teaches his technical analysis class for those of you that are paid members of Market Scholars. That's always one of our most popular classes here. So look forward to hearing his thoughts about the market at 11 a.m. Eastern Time. All right, let's go ahead and now talk about our trade application example here for the day. And I'm going to come over here to the charts, and I'm going to pull up, first of all, I'm going to pull up chart 2A. This is our dividend stair-step chart. I want to talk about a somewhat boring company, Smuckers. SJM is the ticker symbols. So this is Smucker. Most of you probably aware of it, at least if you live in the United States. They're the big peanut butter and jelly company here. Of course, they do other things. They have, pet care and pet food, and they have Folgers coffee and different things like that. But of course, the Smuckers name is fairly well known in the pantries of the United States. As you can see, Smuckers has pulled back. Now, this is a 10-year chart that we're looking at here. And the philosophy that we utilize in my dividend growth investing class that I teach on Tuesday mornings is a philosophy of looking for high-quality merchandise when it's gone on sale. And, obviously we've got to parse through what's high quality and what's not. So we have a whole process of going through a whole bunch of research and analysis during that class. But the point is, once we've determined that something is of the ilk of the quality nature that we want to hold for the longer term, we then start turning to this particular chart where we can kind of get a sense of whether we're at an overvalued or an undervalued area, specifically through the lens of average high yield versus average low yield. And on this particular chart, the blue line that you see right here kind of represents where this stock would be deemed attractive for long-term dividend growth investors. And as you can see, with this sell-off that we've had on Smuckers ever since May, when it was all the way up here at 128, we now find ourselves down here at 108, so it's sold off $20 per share. We went from being outside of that blue zone to now firmly inside of that blue zone, making it more attractive right now from a dividend growth investing perspective, as it's currently yielding about 3.25%. So that's kind of the longer term view. Now on the shorter term part of the equation, I want to take a look at chart 3A. This is one of the charts that we'll be using in my swing trading classes on Wednesdays. And as we look at SJM here, notice that we've had some firming up of price action. I mentioned before that this stock had fallen from 128 down to 108 in recent months, but it's starting to make me wonder if we're going to get a little bit of a reversal here. Notice that in the past, so this is a 3-month chart we're looking at here, we had generally, anytime we rallied, failed. And it kind of looks like it wants to ride that moving average line lower and lower and lower. Now all of a sudden, look at what's happening. We're starting to get this line, the moving average line, in this case the 30-day moving average, turning green. And notice that prior to that, it had not happened in the previous 3 months. I don't know if it did, in the last 6 months. We could check. Not really. The last time we had green moving averages were way back here when it was priced at about $128. So in other words, it gave back all those gains, is now stabilizing right here, and now we're starting to produce a new green line down below where, who knows, maybe we're due for another significant rally here. So we have something in the short term to believe that we have bullishness entering into Smuckers, and we have a reason from a long-term perspective to like where it's trading from a dividend perspective right now as well. Of course, that blue background color on this particular chart denotes the fact that we have a bullish posture using the near-term line, that blue line on the market forecast. But even if we were to go over to the normal market forecast chart view, you can see that the intermediate green line is at 56.92 and rising, so we would have a bullish posture from an intermediate perspective as well. So what I thought we would do today is sell a put on Smuckers, and if it were to fall a little bit further, we would be happy to take ownership of this particular security. I was looking at what stocks we already own in this particular portfolio because I've been adding, high quality dividend stocks in this account for many years at this point, and I thought maybe we would have already had a position in Smucker, but as I look at our holdings, that is not the case. We actually don't own any ticker symbols that start with S. So if we were forced to buy 100 shares of Smuckers, I would gladly accept it, knowing what I know about the company and where it's currently priced. And so one way to try to take advantage of that situation is through what's known as selling puts. When you're the put seller, what happens is you create a credit in the trade. You get to keep that credit. Somebody else has to pay it to you. So somebody else is on the other side of your trade buying puts. You're the one selling them the puts. Now, you get to keep that credit and do whatever you want with that particular money, but you are on the hook for buying that company if the stock closes below the strike price on expiration day. So as we go out here to the November monthly contracts with 29 days left on SJM, notice that on our ROR, our return on risk column, the first one that's above 1% is the 105 strike. So with this $108 stock right now, if I'm willing to buy 100 shares at $105, in other words, the stock would have to fall $3.29 from this level, then there's maybe an attractive opportunity here. You can see that the bid is currently $130, the ask is currently $1.40, and so we'd likely be able to get filled right at the middle point there of $135. And therefore, our cost basis would be even cheaper than $104, right? Because you subtract out the $135 from that. So $105, which is the strike price, minus $1.35 means that our cost basis would actually be $103.65. So it's a way to say, okay, I like this company of Smucker in this case, but rather than buying it at $108, is there a way that I could buy it even cheaper? And by selling a put, you give yourself that opportunity. Now, there's also the possibility the stock could rally from here, and it could never go down below 105, in which case you would not end up buying 100 shares. But in that case, you would at least get to keep the $1.35 that you're taking in when you're placing this trade to begin with. And of course, that translates to $135. So it's kind of like a partying gift of sorts. You don't end up with the grand prize of owning 100 shares of the stock, but you do get $135 just to keep, to say that you would have been willing to buy 100 shares of that stock at $105. So let me go ahead and place that trade. I'm going to go ahead and click on the bid price. That loads up our order down below. I'm just merely going to do one contract here. And then I am going to see if I can get filled at 135, the midpoint between those two. And I will put this one in as a good till cancel just in case it does not get filled first thing tomorrow. So I'm going to click confirm and send. there's the $135 that's coming into our account. Of course, you got to subtract out any commission you might be paying, and that's ours to keep. And if the stock does close below 105 on expiration day in November, we have to be held accountable for buying the shares at that price. But if it closes above 105 there on expiration day in November, then we just merely get to keep that money that we took in here today. Okay, sent that off. We'll see if we can get filled first thing in the morning. All right, thank you for joining me here yet again. Remember, another rally day for the markets, especially with the Russell 2000 up over 1%. We do have a bullish posture across the board in the United States, so things are continuing to firm up here as we head towards kind of the end of the year. Remember that tomorrow David will be back with you, but then next week he's going to be on vacation, so we're only going to have the video on Tuesday and Thursday, and then I'll do the write-up on the other days, Monday, Wednesday, Friday, for you guys that are on our distribution list. So if you're not on our email distribution list, make sure you go over to YouTube, go to the description area to sign up for that. So with that, if you got value out of tonight's video, please click like for us over there on Twitter, and I'll look forward to seeing you all next week. Take care, everybody. Bye-bye.